Today on Forbes, how Misfits Market went from selling ugly produce to becoming the Amazon Prime of perishable food. It's 0 degrees inside Misfits Market's Baltimore warehouse as founder and CEO Abhi Ramesh passes by pallets of frozen pizza, chicken wings, and ice cream stacked high on the walls. From the frozen section, Ramesh moves onto the main floor as forklifts crisscross past 2 assembly lines where subscribers' boxes are being filled. A highly optimized algorithm decides the order of packing based on dozens of metrics, including size, weight, and temperature of the food, how often an item is purchased, and even weather at its final destination. Ramesh says, quote, "All the boxes go down this chain. The order is not at all random. It's a very scientific process." The 33-year-old grocery entrepreneur claims this system is one of only a few nationwide that can ship customized boxes of food to anyone's doorstep with room temperature, chilled, and frozen items all in the same order. This feat, as well as Misfits' burgeoning fulfillment business for other brands, is why Ramesh dreams of becoming the Amazon of perishable food, or at least the Amazon Prime, though he knows he has a long way to go. Ramesh says, quote, "Amazon has built infrastructure for e-commerce, and there's so many different ways of monetizing it. That philosophy has always been in the back of my mind. If we can build the best perishable food infrastructure in the country, we can monetize it in a lot of different ways." So far, Ramesh, who was named to the Forbes 30 Under 30 Social Entrepreneurs list in 2020, has grown Misfits into a business with $500 million in annual revenue, with $45 million of that from Fulfilled by Misfits. Roughly $50 million comes from selling the ugly produce that Ramesh founded the business on in 2018, and another $50 million is generated by Misfits' in-house brand, Odds and Ends. But these days, the vast majority is from regular grocery sales. Fulfillment has become the fastest-growing part of Misfits, and its gross profit margins are the strongest too. That's helped pad Misfits' overall gross margins, which ended 2025 at over 40%, compared to typically around 20% for conventional grocery chains. Misfits Market is making more gross margin than traditional grocery chains, as well as publicly traded marketplaces such as pet food website Chewy, which has 30% gross margins and is the most similar publicly traded business to Misfits because it's an online marketplace that does home delivery for perishable and non-perishable items. Not only that, but Misfits' customers are also still saving more money, between 10% and 50%, than if they shopped in their neighborhood supermarket. Ramesh says few entrepreneurs are competing with him to fix the grocery industry, and in that, he's learned a surprising lesson. He says, quote, "Low-margin businesses are good to build businesses in. The hard businesses are the ones no one goes after because no one can make it work. So there's no innovation, and it's easier to break in and turn it on its head. And if you're able to figure it out, there's a much bigger prize at the end." Ramesh's ultimate goal, he says, is taking Misfits public, like Instacart and DoorDash. Misfits hasn't raised any outside equity capital from investors since 2021, when its Series C secured $225 million at a valuation of $2 billion. In all, Misfits has raised $525 million in equity capital and $65 million of debt from existing investors. Based on current market conditions, which have dropped in the past few years, Forbes estimates that Misfits could have a market valuation closer to $1 billion. Though Misfits says if it raised again, the valuation would be higher than $2 billion. And as Misfits' single largest individual shareholder with an estimated 20% stake, Ramesh is worth at least $200 million. Much like Amazon's early years, Misfits is not yet profitable, and he's, quote, "fine trading short-term profitability for healthy growth." But Ramesh is investing for the long term. For instance, Misfits manages a fleet of 350 refrigerated and freezer trucks. He's also continuing to push the company to new places. It also works with third parties to sell curated boxes for diabetes or cancer patients, utilizing preventative care money for produce and protein purchases, totaling $6 million in sales in 2025. For full coverage, check out Chloe Sorvino's piece on Forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.